Hello and welcome to this weekend's market update. Today is 4th of February. So you're looking at a daily chart of S&P 500. S&P 500 fell 1% to close at 4136. But it was overall a very interesting week where we had the FOMC decision on Wednesday, where they increased interest rate by 25 basis point. Then on Thursday we had some key earnings from Amazon, Apple, and Google. And then on Friday, we had the unemployment report. So the combination of those created volatility in the market. But at the end of the day, at the end of the week, I think S&P 500 came out more positive than negative. We'll have a look at it very quickly. Now let's have a just quick look at the jobs report. So unemployment, the non-farm payroll showed that the economy added 517,000 jobs, way above what the consensus estimate was. Now, I think the key report there was this average hourly earnings, which came in at 4.4%, meaning on average the wages are rising at an annual rate of 4.4%, which is below 4.9% from the previous month, but above the expectation of 4.3. But if you look at the trend, you'll see that the wage growth peaked in March of 2022. Since then, the wage growth has been decelerating. I think this is basically what the Federal Reserve is looking at it and getting some level of comfort that perhaps the wage growth is not spiraling out of control. I don't think they necessarily have a problem with this number, economy adding 517,000 new jobs. I mean, that shows that the labor market is quite strong. See, Federal Reserve has two mandates. One is to make sure that inflation remains in check, and the other one is full employment. So when they see that the economy is adding jobs and unemployment rate is at 3.4%, I don't think they're so much concerned about this one. What they're concerned about is this one, wage inflation. And you can clearly see that the wage inflation has been coming down. And I think this is basically what will give some comfort to the Federal Reserve that their policy is working. And in fact, if the job market remains strong but wage growth moderates, I think this is a win-win situation for everybody, for the workers as well as the Federal Reserve, because they don't want this wage inflation to be going out of control. I think this is basically what the market is looking at and thinking that, hey, if this trend continues, perhaps we can avoid a recession. See, in 2022, the narrative was there is wage inflation, there is consumer price inflation, interest rates are going up. This is going to cause an economic recession, and this will ultimately lead to earnings recession. But now the narrative appears to be shifting somewhat, which is yes, the wage inflation is moderating, the consumer price inflation is moderating. Federal Reserve is coming towards the end of the rate increase cycle. Perhaps economy can avoid a deep recession, and if so, then we may not have a deep earnings recession. So that's basically the narrative. And against this backdrop, I think what's been happening is that the stock prices are gradually moving higher. If you look at the structure, since forming a low right here, you see series of higher lows and then higher highs. So definitely you can see that the price structure is more positive, price action is more positive than negative. If you look at the momentum indicators for S&P 500, MACD remains above the zero line, positive. RSI remains above the 50 level, positive. And stochastic is above the 50 level, positive. You can see stochastic acted as a support here on a daily basis, resistance here, 50 level is this blue line right here. So when momentum indicators are positive, generally you tend to see higher prices. Now that said, we've had a big run up. So if we look at, so let's say S&P 500 since forming this low is now up about over 11%. So you can say that, having gone up 11%, there is room for some pullback. So if there is a room for some pullback, what are some of the levels we should be paying attention to? So let's just first bring in the moving averages. So I've got three moving averages. The black one is the 200-day moving average. The green is the 20 EMA and the yellow one is the 50 EMA. You can see that the two moving averages are rising, and you can see that they have gone above the 200-day moving average. Now this is the first time we see this cross. Last time we see this cross was to the downside, and it was right here. It was here. The moving averages, it was right here. The two moving averages cross below the 200-day moving average. So this is a negative cross. And now what we're seeing is that a positive cross has taken place. So you can see that the 20 and 50 are now above the 200-day moving average. Now, where is the 20 EMA? The 20 EMA is right now around 40.23. So even if S&P 500 were to pull back to the 20 EMA, the overall pattern, the technical pattern, would still remain positive. Only if they fall below the 20 and 50 and the 200, that's when it will start to get negative. If the price was down here, that would be negative, no question about it. Also, as long as the moving averages, the momentum indicators are above, are in positive territory, so this would be. So from a moving average, I would be looking to see whether, so these moving averages would act as support. You can see there was a support right here. So they would act as a dynamic support. So from a moving average perspective, the level I would be watching would be the 20 EMA, which is around 40.23. Now, if we look at horizontal level of support, so what do we do? So I bring in the horizontal levels. So let's have a look at the horizontal levels and see what can we see. So resistance would be right here, which is around 4,200. That's where we have the August high, and then the big CPI sell. So that would be the resistance. Support right now is this level, which is basically where it is. And underneath it would be this level, which is around 40.70. And finally, this level, which is around 4,015. So why this level? If I show you the line chart, you can see that this was the previous swing high, which is around 40.70. And then you can see that in early December, we also have this peak. So this would be the level I would be watching for a support, which is around 40.70. And then this level right here, which is around 40.15. And this is basically also where your moving averages are. You can see the 20 EMA is around that level, and 50 is rising. So those would be the levels I would be watching. So the current level, which is 41.36, and then 40.70, and finally that this level. So those would be the levels I'd be watching. Now, if I look at the SPY quickly, just to see what the corresponding levels are. So let's just get rid of some of the clutter. So if we look at the horizontal level, so obviously this level, which is around 418, that's where we see some selling coming in. The current level is obviously a level of support. We can see that this rally got rejected at this level, so that's basically where we are. The next level is this level, which is around 406, and finally this level, which is around 400. Those are horizontal level. Resistance obviously is that level. You can see that the moving averages are also moving higher. And you can see that the 20 and 50 did cross above the 200-day moving average. So that's for SPY. Now let's have a look at NASDAQ. All right, before we go to NASDAQ, let's have a look at the weekly picture just to see what we see on a weekly time frame. So this is S&P 500. Now from a weekly perspective, see I have the horizontal levels for weekly. Now the horizontal levels are slightly different for weekly than they are for daily. On a weekly basis, I'm taking, these levels are based on the all-time high and all-time low, but for on a daily basis, they are not. they're looking at just the current levels. It doesn't take into consideration of the higher level time frames. So that's the only difference. Now you notice that S&P 500 closed just below this important level, which is around 40.50. Why is that important? That basically, that's the 50% level of this decline. If S&P 500 were to close above 41.50, it will recover 50% of this decline. So that obviously has a ramification. You can also see that on a weekly basis, this area was a problem. 41.50 was a problem right here in May, and then this was a resistance. You can see it was a support in March, and then you can see also in February it was a support. So from a weekly perspective, closing above 41.50 would be a bullish thing. If you look at the weekly momentum indicators, RSI is now above the 50 positive, and it's now made a higher high. So it's now higher than this previous peak and this peak. So that's positive. You can see stochastic is above the 50 level. You can see 50 level acted as a resistance here, support right here, support right here. So as long as it stays above 50, that's positive. You can see MACD is moving higher. MACD hasn't crossed above the zero line yet completely. So if it does, you can see that during COVID, when we came out, when the recovery started, it crossed above the zero line, and it stayed above the zero line until the bear market. You can see this is the, if I draw a horizontal line right here, you'll see that this is the level. These two are very important levels. So you can see that at this level, RSI was above 50, MACD had crossed above the zero line, and stochastic was above the 50 level. And from this point until here, this is the first level when RSI fell below the 50 level. So during this time, you can see generally prices moved higher. So when all three indicators are in positive territory, we can expect higher prices in coming weeks and months. So at the moment, I would say that the indicators are looking more positive than negative. Now, if I bring in the moving averages, so if I hide the drawings for a second and bring in the moving averages, what you see is that on a weekly basis, the price is above, it made a weekly higher high. So if I show you the line chart, you can see that it closed above this November high. So price made a higher high. So this is now a confirmed higher low. So this is positive. Also, what you see is that price has moved above the weekly 20 and 50 EMA. You can see that in 2022, the moving averages were trending lower. Now they're beginning to kind of curl, form a base. And the longer price remains above the two moving averages, the more relevant this breakout would be. And it would then provide an opportunity for these moving averages to curl and move higher. So something like here. So you can see when it was coming out of the COVID sell-off, it moved above the moving averages, and then it spent some time for the cross. And then once it crossed, the moving averages moved higher. So at the moment, it's now gone above the two moving averages, and the longer it's able to stay above, the more relevant this breakout would be. You can see there was a failed breakout right here. So we need some confirmation as to whether or not this is going to be, this is going to be a real breakout or a fake breakout, because you can see that MACD hasn't yet in the positive territory, but the other two are. But the fact that price action is positive, the 2 out of 3 momentum indicators are positive, the probability at the moment is that that we see more positive outcomes. I mean, we can't say for sure whether this is the beginning of a bull market, but based on what you see right now, is nothing what we've seen in all of 2022. In all of 22, price action was lower high, lower lows. Momentum indicators were in negative territory, but that's not what we're seeing. Given that, the longer they remain positive, odds favor further move to the upside, and odds would also favor that this probably is the bottom, for now. If we look at SPY just to see on a weekly basis, on a so you can see that momentum indicators are positive. Let's bring in the drawing horizontal levels and see what do we see. Again, for SPY, this is the 50% level of this decline. This is an important level. So this would be around 415. So if it closes above 415, I think it would be an important weekly milestone. It will take out this resistance. There was a resistance right here. This was a support right here. So this would be an important weekly milestone. The momentum indicators are positive, with the exception of this is moving in the right direction. When that happens, I would say odds would favor more positive outcomes than negative outcomes. Now, if we look at NASDAQ, so let's look at NASDAQ on a daily basis and see what we can learn from NASDAQ. So again, let's get rid of all the drawings for the time being so we can see so let's have a look at NASDAQ. So NASDAQ, since forming this low, NASDAQ is up 20%, over 20%. That's a big move. So when something goes up that much, the previous rallies, this one was 14.5%, this one was almost 12%. When something goes up 20%, you would expect, it would be normal to expect some pullback. So, but if you look at price action right now, you can see series of higher lows coming through. So this is positive. Momentum indicators are also positive. You can see MACD above the zero line, RSI above the 50 level, but overbought. Stochastic above the 50 level. You can see 50 level acted as a resistance, support. So this is an important level. So if it stays above the 50 level, that's positive. Now, if we look at the moving averages, you can see that the moving averages are moving higher, but the 20 and 50, they haven't yet crossed above the 200-day. See, NASDAQ, of the four major averages, S&P 500, Russell 2000, Dow, NASDAQ, has been the laggard. And that's why you see that the two moving averages haven't yet gone above, but it's heading in that direction. So from a moving average perspective, the two moving averages would provide dynamic support. Where are they right now? The green one, 20 EMA is around 11,900. And that's also where the 200-day moving average. So from a moving average point of view, even if NASDAQ were to pull back to 11,900, the technical picture would still remain positive. Now let's look at horizontal levels of support and resistance and see what do we see there. So from a horizontal point of view, so obviously this level is a resistance. You can see there was a rejection right here, and then this level. So 12,800. So the top of that is basically the bottom of this. So 12,800 is a resistance area. So if it's able to get through 12,800, 850, then 13,000 is a psychological level. And then the next level would be this one around 13,200. So 12,800, 13,000, and then 13,200. Those would be the levels on the upside. On the downside, I would look for, I would watch this level, 12,500, and then this level right here, 12,250. So those would be the levels I would be looking at on the downside. But given the steep run-up that it has, I think on a short-term basis, it would be reasonable to expect some pullback so that some of this can be corrected. What are the corresponding levels for QQQ? So the corresponding levels for QQQ, obviously this one, you can clearly see there was a rejection right there, which is around 314-ish. And then the current level, which is around 304, and then this level right here, which is around 297, and then we'll bring it to this level. So those will be the corresponding levels. But you can see that higher highs happening, very steep run up, so normal to expect some pullback. Now let's have a look at on a weekly basis, just to see what we see. On a weekly basis, you can see NASDAQ has now gone above this previous weekly high. So this now is a higher weekly higher low, and it has now established a weekly higher high. Now you can see that the current picture is definitely different from what we've seen in 2022. In 2022, all we saw are series of lower highs and lower lows. But that's not what we're seeing in 2023. We see something different. Price action is more positive than it has been in 2022. Even if you look at the momentum indicators, RSI is now comfortably above 50. So again, this is also different from what we've seen in 2022, where RSI has spent much of the time below the 50 level. You can see stochastic has gone above the 50 level on a weekly basis. Resistance, resistance, support, support, support. So this 50 level is an important level for stochastic. Above it is positive, below it is negative. The only momentum indicator which is not yet in positive is MACD. It remains below the zero line, but you can see that it's gradually moving higher. So if it is able to get back above the zero level, all three of the momentum indicators would be in positive territory. Price action is also positive. So given that, I would expect more positive outcomes than negative as long as these conditions continue. For QQQ, so you can see I've sent out this tweet. You can see that I've broken this bear market decline in 4 chunks, and at the bottom of each bar, you can see there's been a reaction. So the March rally failed at the bottom of this bar. The August rally failed at the bottom of that bar, and then the November rally failed at the bottom of this bar. But what we see, instead of forming a new lower low in January and February, we see it has taken out the November high. So given that, the full measured move from the October low to November high would project a price target to this level, which is around 330, 331. Now, I have this red line drawn here, which is the 50% level of this bar. If it closes above the 50% level, which is around 313, then there is a good possibility that it can move up to this higher level. So 313, we saw that right here. You can see that there was a rejection right here from a daily perspective. If it's able to close above this level, there is a good chance that it goes up to this August high right here, which is around 330. But you can see the momentum indicators are all looking positive. So I would say, based on the price action and the momentum indicators on all major averages, I would say odds would favor more positive outcome than negative. Let's quickly have a look at Dow, just to see what's been happening to Dow. So I'm just going to get rid of this, and I'm going to bring in the moving averages. You can see the Dow has been kind of lagging over the last few weeks. But if you look at it from a weekly perspective, you can see that after this massive rally, Dow is basically consolidating above the weekly 20 and 50 moving averages. In fact, you can see the weekly moving averages have actually crossed and they've started to move higher. See, the longer Dow is able to stay above these moving averages, I think the more relevant this breakout becomes, and I would then expect a breakout to the upside. You see, Dow is not too far from its all-time high. So Dow is basically allowing NASDAQ and S&P 500 to sort of catch up, because Dow had this massive run-up from September. NASDAQ and S&P 500 are only catching up. So that's why Dow is basically going sideways. So I think this is positive price action. If we look at other markets, so let's look at dollar. Dollar had a big move to the upside. So let's have a look at what DXY is doing. Now you can see DXY, it found support right at this level, and then it had a big move to the upside on Friday. The level I'm watching is first this red line, which is around 103.30, but I think the more important level is this number, which is around 105.6. because you can see there was a big rejection. Now you can see the momentum indicators haven't moved into positive territory yet. Because of this decline, they're still in negative territory. RSI remains below the 50 level, stochastic below the 50 level, MACD below the zero line. So I want to see how whether or not these momentum indicators are able to get back in positive territory. If so, then I would expect something more meaningful. But at least for a near-term basis, I don't think we can't rule out the possibility of a move to this level. Now, strength in dollar obviously means weakness in gold. So you can see gold had a massive rejection in the last couple of sessions. I mean, this is quite understandable. Look at the massive run up. Gold was around 1600 in October. It rose all the way up to around 1975. So this was a massive move. So you could understand this weakness. But despite that, the momentum indicators are still in positive territory. On a daily basis, they're showing some weakness. You can see RSI has gone below the 50 level. Stochastic hasn't. MACD has crossed but still remains above the zero line. So we need to see whether or not this becomes, so I could easily see some additional weakness, maybe to this level around 1835. Depending upon what happens in dollar, we'll see whether or not this is a beginning of something big to the downside, or this is just a correction within this bull run up. So that's that. Now let's have a look at the yields market just to see what's happening. So this is a 10-year bond yield. Obviously it was up 13 basis point. The level I'm watching is this one. This is the 360 level. If it's able to get through this level 360, then I would be looking for 375 would be the next level. And finally, this high from December, which is around 390. Not sure that it gets up there, but it probably gets through this level 360. And then I want to see whether it can get up to 375. Because of the strong job market and because of the expectation that maybe economy probably will not face an imminent economic recession, there is now expectation that yields can back up, because the Federal Reserve said, Chairman Powell said that there are two more rate increases coming of 25 basis each. The Fed funds rate is around 475 right now, so two more yields will push Fed funds rate to around 525. So if I look at the yields market just to see what the yields are, so this is the June Fed funds future. So the market is expecting Federal Reserve to increase Fed funds rate to around 5% by June. At the moment, I'm not seeing any expectation about 5%, but that may change. This is the September Fed funds future, which is at 497. Maybe in coming days and weeks, we can start to see yields getting back above 5%. But at the moment, we're not seeing 525 reading at the moment. In December, so this is February, December of 2023, the reading is at 479. So market is expecting some moderation in rates by December, but that can change because the December one ticked up almost 23 basis point. So the rates are on the move higher, and this is again because of the fact that labor market remains strong, and the market now believes that the economy can can deal with a Fed funds rate of 5 to 5.25%, and that's why we're seeing some adjustment. But it remains to be seen whether or not we see a significant move to the upside. So I'm looking at 10-year yield. I just want to see whether the 10-year yield can get through 360 and possibly 375. If so, then this would be where I would expect around 390. If we look at the oil market, so this is the crude oil futures. So that doesn't look positive at all. It failed to get through this level right here. So it looks like it could test the December lows, which is around around 70. So this is looking negative. You can see the momentum indicators are all moving lower. MACD is crossing RSI below 50. So this is looking more negative than positive to me. If we look at VIX, So the VIX, even though the market was down on Friday, the VIX was also lower. It's kind of stuck right now. So on the downside, the support would be this low, around 17. On the upside, I want to see whether it can get through this level, 2150. So this would be an area of challenge. If it's able to get through this level, then next challenge area would be around 23 and a half, 24, and finally this level, which is around 25.75. But I want to see if there is any rebound, whether it can get through this level, 2160. But it's looking quite weak. You can see momentum indicators are all weak. Now, if we look at some of the ratios, just to see if the ratios, what are they telling us? So let's look at it on a weekly basis. So this is XLP versus S&P 500. The idea here is that during market turmoil, investors choose defensive stocks, defensive sectors. You can see this trend has been broken. So the defensive sector is now underperforming. So this is telling me that investors are not concerned. They don't want to be in the defensive sector. They're looking for more growth-oriented sector. So that's why this is underperforming. If you look at next one, XLU, again, this is another defensive sector. This is underperforming. So this is telling me that investors are more comfortable taking on risk. If you look at this is DXY versus S&P 500, again, during times of financial turmoil and uncertainty, they look for safety of US dollar, not seeing that investors are at all concerned about that. This is TLT versus S&P 500. During times of recession, investors prefer bonds over stocks, not seeing any sort of preference for bonds at the moment. This is commodity price index. You can see that commodities since reaching a high in June has been kind of moving sideways to lower. So this is again, this is kind of a deflationary. So this is basically saying that we're not concerned that inflation is going to be rising. So this is a weekly pattern. If it closes below this level, that would be a break of support. You can see the momentum indicators are weak. So if I look at all those, these are all positive data point for the market. If we look at the sectors in S&P 500, I'll just go through the sectors quite quickly. XLK, largest sector, weekly higher high, momentum indicators are positive. XLY, this is discretionary, this is weekly higher high, momentum indicators improving. This is financial. Financials, they are close to breaking out to a new weekly high. Momentum indicators are positive. So more positive than negative, which is good for S&P 500. XLV, second largest. You can see that it has now come to the a support zone. This is showing some weakness. You can see there is a cross right here, but it still remains above the zero line MACD. RSI is at the 50 level. So we need XLV to kind of turn around. You don't want XLV to be basically crashing, because this is the second, even though this is a defensive sector, you don't want this to be crashing, because this is the second largest weight in S&P 500. XLC, strong move to the upside, weekly higher high, momentum indicators improving. XLB, building materials, consolidating after a strong run up, momentum indicators remain positive. XLI, consolidating after a big run up, momentum indicators are still positive. XLU, we talked about it. This is a defensive sector underperforming. So when I look at it, let's look at the energy. This is where I'm seeing some weakness. You can see that momentum indicators are kind of weakening. They're not in a negative territory yet, because you can see our weekly RSI is still above 50. Stochastic is above the 50 level, and MACD also above the zero line, but it's showing some weakness, so it looks like it may consolidate, but this is a defensive sector, so I'm not that concerned. I want, in a bull market, you generally see growth sectors outperforming, and all of the growth sectors has been doing very well. Finally, if we look at Bitcoin, I think Bitcoin is setting up for, it's definitely looking more positive than negative. You can see that RSI, weekly RSI is above 50. Stochastic has gone above the 50 level. MACD hasn't crossed. That's the only thing. On a daily basis, you can see that this is a this is a positive consolidation after a big run up. You can see that the moving averages are basically moving higher. So there was a big run up. So it's now digesting this move. You can see that the two moving averages have now crossed above the 200-day moving average. So this is looking more positive than negative to me. So just to summarize S&P 500, I would say that longer term trends are improving. On a shorter term basis, they're looking a little bit, there's an opportunity for some pullback. We've discussed some of the levels. So I'll just leave it at there. Thank you very much for watching the video.